to get together. Delighted as always to welcome our host, FOIS, the Fujairah Oil Industry Zone, and also to welcome our knowledge partners, obviously Gulf Intelligence, but also S&P Global Platts. We're going to look at this question as we come out this morning of the sort of coming out of the COVID pandemic, but also, for better or worse, oil prices hitting $100 this morning. Obviously, the crisis in the Ukraine dominating all of the headlines, as it should. But ultimately, oil prices have been elevating for quite a long time now. Perhaps the last $10 elevated, pushed that extra step by the crisis in Ukraine. But nonetheless, a very high oil, relatively high oil prices from a historical perspective, combined with obviously the end of COVID, the inventories being drawn down over the last 18 months, and we emerge into this new dawn. And ultimately, that's where we sit with the workshop today. What is the outlook from here, and particularly from the perspective of Fujairah and the global energy hubs that Fujairah belongs to? Let's kick off this morning and welcome our host, Captain Salam Al-Hamoudi, Director of the Fujairah Oil Industry Zone, to turn on his camera and his sound microphone and to give some opening welcoming comments.
Thank you, Sean, and it is my pleasure to be here with you today. So good morning, and thank you for joining us for what is the 5th Fujairah London IP Week workshop. While many countries have declared an end, as you stated, to all COVID protocols, not everything is quite back to normal. We are still hosting this 5th anniversary workshop virtually, and it is no longer IP Week, it is now the International Energy Week. But in many ways, here in the Middle East, much is returning to trend after a challenging 2 years of the COVID pandemic. Despite all the turbulence, Fujairah is coming off a record year in terms of liquid bulk throughput. We saw many new developments in 2021, starting with the commissioning of Borouge Energy Phase 2 expansion and announcing it was moving forward with the construction of its proposed Phase 3 refinery and storage project. We also saw ICE Futures Abu Dhabi IFAD in partnership with ADNOC launch Murban Oil Futures contract, and they selected Fujairah as the energy hub for the physical settlement of the new contract. Abu Dhabi went one step forward and declared during ADIPEC in November that Fujairah is now at the center of its strategy to go beyond the borders of the UAE, stating that Fujairah is becoming a tipping point between the producers, exporters, and traders, where basically supply meets demand. So that is for 2021, and moving to 2022, the year has kicked off with no shortages of new surprises regionally and globally. And of course, most notably this week with the Ukraine crisis and oil prices exceeding $100 a barrel. The drawdown of global oil inventories to well below 5 years average, the lack of spare oil production capacity, and the limited investments in the sector in recent years is also helping keep crude oil at 8 years high. This elevated oil prices, of course, will bring both challenges and opportunities, which in some ways perfectly sums up the outlook for 2022. The increased oil revenue underpinning spending in major national infrastructure projects such as UAE Railroad connecting all 7 Emirates. It will also bolster the determination of Abu Dhabi to raise oil production capacity towards its goal of 5 million barrels a day. The increase in OPEC plus production quotas is already seeing more oil flowing from the region every month, while at the same time, the steep backwardation in the oil market is resulting in less of it heading for storage. Still, Fujairah is closer to a major expansion of its crude oil storage capacity, with the ADNOC underground caverns moving towards completion. At the same time, refineries are planning expansions, and container shipping is likely to get a boost when the Etihad rail connects to the city. 2 other Fujairah companies, Ecomar Energy Solutions and Borouge Petroleums, are investing further into storage and refining facilities in Fujairah, while Uniper Energy DMCC, one of the refineries in Fujairah Oil Industry Zone, may also boost its refining output. Meanwhile, a dry bulk export facility to ship from Fujairah's Diba is set to open later in 2022, providing a boost to bunkering activities, while LNG bunkering may soon be introduced. To conclude, Fujairah, through the leadership vision and the dedication of our partners, shall continue navigating the uncertainties of the future with innovation, efficiency, and resilience, tapping into the full potential of our energy hub. Thank you. Back to you, Sean.
Thank you, Captain Salam. If I might just, before bringing up the guest speakers, ask you, another big event that happened in 21 was the announcement that the UAE was going to host COP28, the climate conference, and actually, indeed, Egypt are going to host COP27 in mid-November. I'm wondering, from your perspective, what kind of impact this will have on Fujairah's plans for the future?
I think the UAE has sought to protect the environment since its formation. Over the past 3 decades, the country has remarkably contributed to addressing climate change, becoming a leading global model due to the vision and directives of its leadership. It was the first nation in the region to announce ambitious renewable energy programs back in 2006. The country set a 7% target for renewable in its energy mix. This is now 24% target, which we expect to achieve very soon. And Fujairah is aligned with reaching these critical goals for the country.
Thank you, Captain Salam. Before we invite the panelists up, I'd like to just kick off with a survey question. If you would bring up the first survey question, and there might be a few during the course of this morning's discussion. Firstly, this one, oil and gas was the best performing index on the New York Stock Exchange in the fourth quarter. Much, a year earlier, it was about to fall off a cliff. Now it's the best performing. We had the Tellurian chairman say only yesterday it's now imperative for financial institutions to increase their exposure to hydrocarbons, which to a great extent is kind of contrary to the narrative of last year coming out of COVID and COP26, the opposite, get away from hydrocarbons. But clearly, there's very big returns to be had. The oil majors are making record profits. So my question is, the encouragement for financial institutions to increase their exposure to hydrocarbons to avert the looming supply shortage that everybody seems to be talking about. But my question is, will the financial institutions increase their exposure to hydrocarbons or not, given the sort of the conflicting forces of possible economic returns versus the energy transition? Everybody has a view on this. I'd ask you to cast your vote as I invite our panelists to join Captain Salam on screen. Dave Ernsberger, Global Head of Pricing and Market Insight at S&P Global Platts. Welcome, David. Kieran Gallagher, Regional Product Head at Vitol Bahrain. And Dr. Anas Al-Haji, Managing Partner of Energy Outlook Advisors, sitting in Dallas, Texas this very early morning. So we welcome and we thank you all for joining us. Dr. Anas, I'm going to kick off with you and just go straight into, obviously, this news of the day. Oil prices above $100 a barrel. The Ukraine war would appear to have started been on for 7 years, some would argue, given Russia's occupation of parts of Ukraine. But nonetheless, we seem to have crossed a crevice this morning, and prices reflect that. Connecting the dots of the escalation of Ukraine, in your opinion, what are the ramifications as we can see them at the moment for the wider energy industry?
Do you have 5 hours?
No, I have about 52 seconds. So
we are talking about major issues here. And let me start with issues that people are not paying attention to. Ukraine is the basket of the world, in a sense, of various foodstuff, including grain and corn and other stuff. The issue here is many oil-producing countries depend heavily on it. And if we lose that, we end up with a serious problem in some of the oil producing countries. We have a history of 70, 80 years in the oil producing countries where crises always happen when oil prices are high, not when they are low. So if we end up with people demonstrating in the streets in some countries because the cost of the bread is very high, because the cost of food is very high, because the cost of the fuel is very high, then what's going to happen? And what's going to happen to oil supplies? I know everyone is going to talk about oil supplies and natural gas supplies from Russia, but I'm talking about other countries. And you ask me about the ramification. We might end up with crises in other countries as a result because of the food crisis. And the second point I would like to make here is, are we going to end up with a situation where countries are going to renege on their subsidies to renewables and electric vehicles because they have to subsidize food now? So we have this competition between subsidies to food and other items versus electric vehicles and renewable energy. On the other side, we've seen countries liberating the energy markets within those countries, within the borders, and then increasing taxes. Now we are seeing them reducing taxes, which increases the demand for those products. So are we seeing the whole change now, everything we gained since the 90s being changed because of this crisis right now?
Well, that's certainly, as you say, a 5-hour answer to that very big question. And we won't really know, I suppose, every day this will unfold in a different way. Let's get the survey result. And just before bringing in Dave Ernsberger, yes, will they increase their exposure to hydrocarbons? The answer in this room, at least, is yes. Maybe we're a little bit biased, Dave, but nonetheless, bringing it all back home to Fujairah. The $100 oil that we have seen now, or at least the approach to it, clearly coming out of the COVID pandemic. The question that we're tackling in this question is, how can Fujairah take advantage of this period? I mean, putting aside the tragedy that is the Ukraine situation, but 100 million barrel market coming, $100 oil or close to it, maybe here for a while. What's that opportunity present for Fujairah?
Thanks, Sean. Well, clearly, the opportunities are associated with the imbalances in the energy markets globally, as opposed to any particular opportunities related to the tragic events going on in Europe at the moment, in Ukraine. And you've been very clear about that in your question, and I'd be very clear about that in my reply. When we talk about opportunities for Fujairah, what we're talking about is that there have emerged over the past 2 years clear, serious imbalances in the global energy markets and the global commodity markets more broadly that are institutional and systemic in nature. And what that really means is, over 24 months, we went from the market having faced a catastrophic loss of demand and a sort of an existential crisis associated with that. We've worked through a very meaningful and important discussion around the energy transition. We briefly saw what the climate can look like with the economy turned off for about 4 months in 2020. And I think that elicited a genuine, meaningful, and important discussion that will persist around energy transition. But now here we are in 2022 at the end of that 2-year cycle, and we've realized we don't really have enough energy to supply markets globally in a secure and affordable way. And again, I'm talking about the global supply chains, not what's happening today in Ukraine. And the opportunities for places like Fujairah, and particularly Fujairah, is to be a balancing point for the conversation around the role that traditional fuels have to play and renewable fuels have to play in the supply mix going forward. Because as we've been talking about in London this week, both at the London Energy Forum, over the Energy Week itself, and now today, I think the most important learning we have today is that it will take classic traditional fuel sources and renewable fuel sources to meet the demand of the future. And Fujairah is well positioned to deliver on a continued supply of critical fuels like low sulfur marine fuel, even high sulfur marine fuel with scrubbers, plus ammonia, LNG, and other fuel sources in the future, and much more besides. And Sean, what I'd say, I don't want to take too much of your airtime here, but we had a lot of attendees at our event in London this week from the investment community. And I had a chat with one of them after the main session we had, and he was asking whether or not there would be, in fact, opportunity for financial investors to get more involved in these markets, because clearly there's a need to invest. And in our opinion, there is an opportunity there because of the differentiation that's being presented through carbon awareness, measuring the carbon intensity of different sources of fuel, the carbon intensity of different locations is a new innovation in the market that actually will help people to target investment into lower carbon intensity activities, i.e. more climate neutral activities. And I think Fujairah can play a leading role in that conversation. Why not start measuring the carbon intensity of the industrial activities in Fujairah? Why not start measuring the carbon intensity of the supply chains that pass through the port? Because by taking a leading role there, we can take a leading role in that conversation and attract the kind of investment that we're going to need.
Thank you. Kieran, same really thought to you, and a welcome in particular coming out of this 2-year period. Clearly, a lot of it was a contango market, lots of opportunity, elevated throughput, record, as Captain Salam said. Now we're kind of coming back to trend. But coming out of this period, is there legacy? Is there a unique moment that creates opportunity? For example, this point of investment, given the retreat of the traditional banking financial sources, that has created opportunities for even companies like Vitol to finance and access opportunities that others might be retreating from. Are there any trends like that that particularly do you think intersect with Fujairah going forward?
Yeah, good morning, Sean. I think obviously, yeah, we're coming out of one cycle into another after whatever, over a year of super contango, and therefore Fujairah was incredibly busy, like a lot of these tankage hubs, for long-term storage. Ultimately, we've seen a huge drawdown in stocks now, and therefore the port is challenged. Stakeholders in the port, like ourselves, VTTI, etc., are also challenged. Where do we go? Part of that is the energy transition for sure, and as Dave touched on there's part of it LNG bunkering. Looking at that, is there conversion of tanks to things like ammonia, etc., for different arbitrage opportunities. But then we have to look at Fujairah as a hub in terms of, yes, I agree with Dave to an extent. It becomes a balancing point. The Gulf is adding more and more refinery capacity, and these are super refineries. And ultimately, poor refining economics, high price of gas and feed, etc., are means of closure in some other areas of the world. So there's that geographical imbalance that, at the heart of it, Fujairah can become a hub in that geographical imbalance, because you see, for instance, in the first couple of months of this year, say, Chinese product exports have been incredibly low. And therefore, there's been a pull from the Far East that's not quite traditional, but the increase in volumes have been huge, and a lot of that has been pulled from the Middle East. So there's different things like break bulk opportunities for Africa, again utilizing the refinery, the complexes around, including Abu Dhabi, of course, and using that as a base arbitrage hub going forward, as opposed to the more traditional contango storage plays of the past few years.
Dr. Anas, one of the other sort of emerging trends coming out of this 2-year period, out of this sort of crash in global demand and then the recovery, and with it the sort of managed supply return, is the role of the national oil companies going forward as being the source of the incremental new supply for all the different reasons, whether it be the transition, capital, resource base. Ultimately, your thoughts on the fact that, let's say, even Abu Dhabi is looking to go from 3.5 million barrels a day to 5 million barrels a day, and the other countries in the region looking to grow their capacity. What that presents, indeed, will that happen? And what that presents in terms of opportunity for export input hub like Fujairah?
I would like to go back to your first question and second question you asked my colleagues about Fujairah. Really, what's coming to Fujairah right now as a ramification of what happened in Ukraine, that there is this massive push in the next probably 2-3 days to finalize the Iran deal. It seems that this is one of the objectives of Putin, and at the same time, it is one of the objectives of the Biden administration. Once that deal is signed, and then in the next 12 to 24 months, Iran basically starts producing more and exporting more, Fujairah is going to play a bigger role in this. So I think the biggest days are coming because of lifting the sanctions on Iran. To go back to the national oil companies, the trend is very clear that they are transforming those companies to be global energy companies. So the first word is global, and the second one is energy. So we are going toward that. The other one is it is very clear that they want to monetize by selling the pipelines, by selling infrastructure to investors, etc. And because they are national oil companies, they are getting the money, and that's the other trend. In terms of expansion, it is very clear that we are going to end up with a massive energy crisis. What we've seen today is nothing in front of what's coming, and the reason why, because this green energy that the people are, or the carbon neutrality policies are going to fail partially. And if they are going to fail partially, then the demand for oil and gas is going to be way higher than expectation. And where oil is going to come from? Only those companies basically can meet that demand. We've seen the Saudis increasing capacity right now. We've seen ADNOC increasing capacity, and probably we'll see other companies doing the same. The mistake that the international oil companies did is they moved from the long investment cycle to the short cycle by investing in shale. That was a big mistake, and we are paying the price for that. That leaves a big room for the national oil companies.
Captain Salam, of course, the same sort of point to you, given this change in the increase in production, most notably, of course, your neighbor Abu Dhabi, ADNOC, already moving a lot of crude oil through Fujairah, but more to come. How much of the future of Fujairah is going to be built around crude oil rather than where it has come from over the last 20, 30 years around products?
Thank you, Sean. I think, I agree with majority of what's been said, by my colleagues here in the panel. Fujairah, the start of Fujairah was around bunkering, and then we moved into a new era of more of storage, refining, and then the storage of derivatives and other petroleum products. We've been growing in that aspect in tankage as well as in throughputs and the number of ships and destinations we are serving. Once it comes to crude, we have seen a growth in the amount of crude tankage here in Fujairah. And associated with that, there is a growth as well in the refining capacities of Fujairah, and yet to be grow as well. I believe our next evolution or our big chunk of business in the future is going to be associated with the crude, given the fact, the connection and the flexibility that we have in here, the big investments of ADNOC and Borouge commissioning 600,000 cubic meter worth of crude storage. Ecomar is adding more crude storage. So, given all these facts, I think the future will hold more opportunities for Fujairah to be more of a player in crude as well, not only in the derivatives and bunkering.
Let's get the second survey question up, if we could, Irene, on this sort of, looking at this next step scenario. What is the most important next step for Fujairah to take advantage of what might be what we call the foothills of the final oil boom? A, embrace the transition. B, double down on fossil fuels. Crude oil, biggest underground storage in the world, 42 million barrels, actually in a mountain rather than underground, the ADNOC caverns. Make ESG a top priority. Of course, very central to the global industry now. D, total transparency in data, which Dave referenced there, the idea of the carbon footprint of processing and operations, or none of the above, indeed, none of the above. Which of these is most important? Of course, you could say all of them are important, but which you think is the most important next step? Double down on fossil fuels, embrace the transition, ESG, total transparency, none of the above. Welcome your thoughts on this. For Fujairah, this is not for the industry, not for the world, but for Fujairah. Dave, of course, Platts has been at the forefront of the development of Fujairah for a number of years, now publishing the weekly inventory numbers for a number of years. Now you've got last year started on the bunkering numbers, got the assessments. Where do you see some of this list of priorities, and also from your own outlook and possibility of the last year we saw a new crude contract for the region, obviously out of Abu Dhabi, but the Platts vision for a products benchmark coming, and is it accelerated? Is it elevated by this new dawn?
Thanks, Sean. Well, the weekly inventories and the monthly bunker statistics, of course, is data we work on in partnership with Foy's and Captain Salem and his team and Captain Musa. So my thanks to them for their partnership, and of course to you as well for the work we've done together in this space. And I think that it's no coincidence that the more data that's available to the global market about what's happening in Fujairah, just like in other hubs, the more that's returned in the form of confidence, investment, and activity from other actors in the marketplace. So I don't think it's a coincidence at all that the IFAD Murban Futures contract has its nomination point as Fujairah, because the global market is confident that Fujairah is a critical piece of the global infrastructure, because there's this much data in the market, because it has world-class transparency into what's coming in, going out, and moving around on location. So, you know, as with all hubs and all key parts of the global pricing infrastructure, the more data that we have on Fujairah, the more confidence the market has in understanding the movement in prices in Fujairah. Now, that's just as true for refined products as it is for crude oil. We, in fact, last year, actually it was sort of late 2020, introduced our FOB Fujairah assessments, Mina Platts Fujairah, as an important component of MOPAG, our refined product netback assessments that the market still likes to use as a reference price in product contracts. So already today, if the price of MOPAG was to plummet towards zero again, our FOB Fujairah spot price assessments, which are standalone flat price assessments, will be there to act as another input into that netback value to ensure that if they do go towards zero or even below, it's because the price of Fujairah itself had done that on a flat price basis. So the market embraced that change. It likes the fact that the FOB Fujairah number is part of the netback in that regard. And that is a place to continue to build from as we talk about FOB Fujairah spot prices being important to products too. Now, if you put FOB Fujairah product prices alongside crude prices in Fujairah, not just the IFAD futures contract, but our own crude price assessments have Fujairah components as well, you start to get a pretty compelling environment to understand not just the value of the products themselves, but of course the spreads between them too, which is really important to thinking about investment in everything from refining to transportation. So more and more data is being created around Fujairah, about Fujairah, that are helping markets to grow confidence. And it's been a great journey already in the last 5 years.
Kieran, I'd welcome your thoughts on that. Clearly, the second panel is kind of tackling the question of the hard infrastructure, and there's been a lot of that in Fujairah over the years. But your thoughts on the soft side, the question that was asked, and the need. I mean, we saw, as we said, that another crude contract in the region last year out of Abu Dhabi, Murban, IFAD. The talks of a potential products contract. Of course, you work on products. I'm wondering the importance of these things, the options of them, and the need for them, indeed, going forward.
Yeah, well, I think just to touch on IFAD first and the build up on that, it's still, I guess, in its infancy, but, you know, Vitor, a key stakeholder. I think the liquidity is building, but the liquidity is in the front. The challenge now to grow is adding liquidity towards the back end of that contract for. And I think one of the other Gulf reporters, maybe to paraphrase it, liquidity attracts liquidity, and that's the challenge going forward. But I think there's a lot of goodwill behind the IFAD contract. You know, the Murban grade in itself is obviously looked upon, you know, an Asian grade, much desired by the Asian refineries, and therefore the stakeholders are happy to support. And I think, you know, with IFAD, those volumes should continue to grow with key support from ADNOC. With regards to more the product side, I have to say I disagree with Dave. I'm not sure the Fujairah quote has had sort of market buy-in, and that's principally because, you know, the tankage infrastructure is what attracts people to Fujairah. You know, the geographical location is what attracts people to Fujairah. We have got a very small refinery there, and as you said, Ecomar and Uniper also have units, as Captain Salem pointed out. But it you know, we can't get away from the fact it's not a refining hub, and therefore the AG quote for product is still the base for which products in the region are traded, and you know, the critical, Fujairah has the critical infrastructure with it to for it to be an important piece of AG trading, but the region as a whole needs to be taken into account for the base quotations, because don't forget, you know, for most of the products, for fuel, naphtha, jet, and maybe 50% of the gas oil, this is a base arbitrage point. So, you know, when arbitrage is key to the underlying movement of oil, you know, we all need to hedge, and we need to hedge as accurately as possible. What we found with the advent of the Fujairah quote, there wasn't going to be a liquidity provider as such, and therefore it was important that maybe the base for those arbitrage economics and the ability to hedge into one center or the other remained there, and therefore I think that it's key that the MOPAG quote is still the base value in the AG. But undoubtedly, you know, going forward, I think, you know, as I said, Fujairah remains a critical part of the regional infrastructure, but equally, it's not a refining center, and that's the key difference.
Just to come back on that point, just slightly wider lens on it. Again, the idea of coming out of this period of 2 years. Both Hong Kong and Singapore, to a great extent, have performed, I mean, from my point of view, others might differ, rather poorly in the management of COVID. They went down to zero tolerance. A lot of people wanted to get out of there and relocate to London. I'm just wondering, on that prism alone, Captain Musi, you're a little bit early. Don't be checking me off the stage yet. But
no, I have a comment on the both. That's why I will answer. I want to comment on Anas and on the currents. That's why I answer.
Okay, thank you. Let me just get Kieran to comment on that. The idea that coming out of this crisis, of this pandemic period, and the performance of Hong Kong, Singapore, does it in any way change the prism of where people, obviously these contracts and trading is very virtual, but nonetheless, these physical hubs?
I think with Hong Kong, it's a demand center in itself. Say something like for jet fuel in particular. If we focus on Singapore, which has both refineries and a huge amount of tankage, I think you're right. They've approached COVID in a very conservative manner, and I think we have seen a drop in liquidity around that in many of the contracts. Certainly amongst, you know, there was during 2020 there was a natural drop in bunker demand, and therefore a drop in liquidity around some of those contracts. But we're not saying we saw a direct shift to any other location that we could say, well, okay, they've picked up the slack, so to speak. Right. But undoubtedly, we are seeing a renewed focus, which we probably haven't seen in 10 or 15 years, back into the Middle East. and trading companies relocating here, and much of that is towards the UAE, of course, and with that, Fujairah is the main third-party trading hub of the UAE, because a lot of the ancillary support is there. The banking structures are there, the legal structures are there, the technical expertise with regard to tankage is there. So I'm not so sure that we're going to see a direct shift away from the Far East because of sort of COVID-related approach or anything like that. But I think what we are seeing is fresh support for the Middle East, fresh support for the UAE and Fujairah. But that's, I think I would go back to my original point. A lot of that is because of additional refinery capacity coming on, and companies, ours, we continue to expand as well, getting ahead of the curve with Al Zour coming on, Jizan coming on, Duqm coming on. There's the product-led arbitrage, product-led trading in this region is going to grow, and just last week, obviously, the announcement of the temporary or long-term closure of SAPREF, we're going to see further flows down to South Africa. There's Mediterranean refineries under pressure. We're going to see increased arbitrage into the Med. And here in the Middle East, it's the hub that additional supply is going to come from. So I think we can not ignore Asia, but say with some degree of certainty that the liquidity is going to grow around this region.
Okay, before I bring in Anas, I'd like to, Captain Musa, you wanted to make a comment?
Yes, thank you very much. I step in because most of the Fujairah and the port being covered by Captain Salim and Dave. I have comment with what Dr. Anas said. Actually, is early morning in Dallas, but he says very good point that I want to mention. What we feel, there's sort of selfish from big company that's spending a lot of money on shells and keeping the area here that is we need. That is the storage of the crude oil. We are so late. We have very less crude capacity here. Today, when Iran will open, what will happen? It is very short. So if the big company that is trust in Fujairah and build a little bit more crude storage, then that will solve a lot, because there's a lot of saving here. So that's what is the first point. Second point for Mr. Karen, when he mentions about Fujairah don't have a refinery, we have talking with actually refineries is require a huge land. But today, what we're hearing from Abu Dhabi, that's the biggest refinery to take place in Suez, actually all the products will come to Fujairah. There is a lot of study that by pipeline or by ships. So we feel that is, at the UAE, we are working very close with ADNOC to most of that material of that product will come to the hub. That's where the trading. So that's why we are telling you there is a sort of study between us. That is, yes, we don't need in Fujairah a refinery, big refinery, but the product will come as we are having a refinery. This is my comment.
Okay, well, thank you very much. Dr. Anas, I wanted to get your thoughts also on this survey, the second survey question, and maybe also get the survey result, which we haven't had yet. So embrace the transition by a slight majority, etc. Your thoughts, Anas? You're on mute, sorry, Dr. Anas.
Okay, sorry, I think I was that 25% in the second one, double down on fossil fuel. And the reason, of course, there are multiple reasons, but the main reason here is that when we talk about ESG and carbon neutrality policies, I've been surveying this for over a year now worldwide. I'm looking at the companies and looking at governments, and the results are literally shocking. And one of the main results that companies and governments are going for the low-hanging fruit, and everything else is an accounting game. And we talk about accounting game, for example, funds that are kind of shying away from investing in fossil fuel, or those companies that are divesting. Well, they are divesting because they are selling those assets to someone else. So yes, their own carbon footprint is getting smaller, but for the world, nothing changed. If I have several assets and I want to be greener, all I got to do is see which one is the most polluting asset and get rid of it. So if I have a refinery that is 70 years old, I can get rid of it, and all of a sudden I am 30% lower because I got rid of it. But still there, it is there. The world did not benefit from my move at all, and that's where we are going. We are seeing companies basically claiming the trees on their campuses, and those trees are 100 years old.
Dr. Anas, I wanted to get you to also comment on this issue of the hub idea. We just talked about different benchmarks, obviously some complementary, some competition, but regionally we've seen, coming out of this COVID period, the emergence of competition in the region. Saudi Arabia and the UAE now, at least as you read in the newspapers and as reported, is more in economic competition than they were before. We have Oman setting up a significant facility in Duqm, which could be competition for Fujairah. I'm wondering, from your point of view in the region, as we come out of this period, this idea of greater competition amongst the countries.
I think based on what I just said, what we are going to see is most of the people who are going to leave are from Europe and other places, and therefore there will be concentration in the Middle East. And therefore, I don't think there will be that stiff competition among those ports or these facilities, because they are going to take businesses from others around the world simply because others are shying away from fossil fuel. So I think the competition is going to be less than what's expected.
David, I'd like to welcome your closing thoughts, and particularly we haven't mentioned this record backwardation that's in the market, as obviously was referenced to, but ultimately the year ahead looks like it will be a defining factor, and how that may play out and impact coming out of this COVID period.
Thanks, Sean. You mean how the backwardation will play out and how?
Yeah. I mean, ultimately, it's a challenge, obviously, to the core business of a hub like Fujairah in terms of storage. And it is not just a regular backwardation, it's quite extreme.
Yeah, well, ultimately, of course, market structure drives tank utilization rates, and thanks to the data that's in the market on storage in Fujairah, which is now well into its sort of 4th or 5th year here, we can really track the effect that market structure is having on storage. It will never be completely empty because people need to have stocks on hand for blending and for resupply and so on. But the incentive to store, of course, will be greatly reduced as long as there's a fearsome backwardation, which encourages people to supply very much on a short-term basis anything they have, and buyers clearly desperately want anything they can get. But our longer-term forecast for the rest of this year from Platts Analytics and our forecasting team is that market conditions will, as they always do, of course, Sean, normalize at some point. The best cure for high prices is always high prices, and likewise for low prices as well. The best cure for a strong backwardation is the market's response to meeting that short-term call for supply. And what's been unusual about the year so far is that we haven't seen the response from, if you start at the top of the supply chain in crude oil, we have not seen this response from US independent producers that we've seen in years gone by before the pandemic. That short-term supply has not been available to hand. The swing capacity has not come to market. And for now, at least, the only spare supply we see at the top of the supply chain is what remains in OPEC and OPEC plus. And that is being gradually reduced with every passing month, as we all know. And at some point towards the end of this year, we will likely be in a position where OPEC plus has around 2 to 2.5 million barrels a day of available supply that it could bring to market. It's all Saudi Arabia and UAE. And the market will be exposed to anywhere from 1.5 to 3 million barrels a day of potential shortfalls in non-OPEC supply, depending on what goes on in other parts of the world. So things will remain tight for the rest of the year is our forecast. We haven't seen the investment, we haven't seen the short-term supply come to market yet, but it won't be as tight as they are today. And so we would expect to see the backwardation come in. Our current forecast is for prices to fall back below 100 once all of these events of today have finished playing out, whatever is to happen there. And of course, we're heading into now the second quarter, which is a seasonally slower time for demand. We're coming out of an overheated winter and heading into a moment in Q2 where we will be able to take a collective intake of breath. And I think by the summertime, we'll have a sense for how well the markets reacted. But inevitably, markets do rebalance themselves to some degree, but we don't think there's any chance of oversupply coming on the back of this. We're not in that situation at all.
Thank you. Last word to you, Captain Salam, as our host of this session, your closing thoughts.
Thank you, Sean. I agree with David, the earlier comments for the previous question, and thanks to Captain Musa as well. I would like to comment on the energy transition and the importance of, Fujairah and the role Fujairah is going to play in the future. I think we need to be realistic on, our expectations out of the new renewable energies and how much the fossil fuels will play in this transition. We are confident that Fujairah will play a very essential role in this transition. We are confident that new alternative fuels will be produced, stored, and shipped out from Fujairah, and there will be balance in the whole equation. The oil and gas industry will still have many years to play and balance this energy transition. So this is what I wanted to say at the end, thanking all the panelists to participate with us today.
Maybe we'll just wrap up this session with that last survey question back on the screen, Irene, if we could, as I thank our panelists, Kieran Gallagher, of course, sitting in Bahrain, but Dr. Anas, really appreciate you staying up so late in Texas. And of course, the previous question, I just wanted the results of that question. Dave Ernsberger, thank you so much for not only being the knowledge partner of this event, but also for many years now, but for getting up right early in London as well. I just bring up this question again, just to remind us of some of the thoughts. Embrace the transition, double down on fossil fuels, total transparency. I suppose the good thing is that E didn't get any votes. None of the above didn't get any votes. So at least we were asking the right question, perhaps. Dave, thank you very much. We ask now this panel to turn off your cameras and your microphones, and we will welcome the next session. The headline of the second panel, and I excuse the language, but ultimately it's plagiarized from a famous quote: "It's the economy, stupid." The energy crisis in Europe reminds us that successful energy hubs of the future will be about infrastructure. I.e., it's kind of so obvious in a way, but nonetheless is not, and maybe needs to be revisited. Let's welcome and ask our panelists to open their cameras. Of course, we had Captain Musa Murad on earlier, Managing Director of the Port of Fujairah. We've got Tony Quinn, Operating Partner, ProStar Capital, and CEO of Tank Bank International. Neil Robertson Jones, Head of Corporate Banking at the National Bank of Fujairah, and Jared Pearl, Chief Commercial Officer at VTTI. I would ask you all, gentlemen, to turn on your cameras and your microphones. And as you do, I would lead off this panel session with the question, the survey question that sort of takes us into this topic of infrastructure. And that question is, how big a role will hard infrastructure play in determining the most successful energy hubs of the future? We've talked about that directly in the opening panel. We don't have a major refinery in Fujairah. Is that yes or a no positive? We talked about the soft side of the benchmark contracts and transparency supporting them out of Fujairah, and of course the plans for Platts to introduce a benchmark for products, and also the ADNOC or the IFAD, ICE Abu Dhabi Murban contract. So, but the physical infrastructure in which Fujairah has been a first mover on for so long, the question is, how big a role will hard infrastructure play in determining the most successful energy hubs of the future? Significant, moderate, or minor? And that we put out there for everybody to think about. Let's kick off this session with the money. Neil Robertson Jones, Head of Corporate Banking, National Bank of Fujairah. Is the financing, is the capital, is the money there to coming out of this COVID period? Of course, there's a lot of talk about bankers don't want to have anything to do with hydrocarbons. We had one comment just there by Dr. Anas, double down on hydrocarbons. Where is the banking appetite to finance further infrastructure, further investment in the hydrocarbon?
Well, in my opinion, I think it's inevitable there will be greater investment in hydrocarbons. Notwithstanding the COP, when everybody decided that they wanted to do away with everything and everything that should be green. Yeah, the reality is, if you looked at the recent reports about some of the major international banks, a French bank, a UK bank, for example, whose actual investment has remained the same and actually slightly risen, because at the end of the day, the transition is a period which has to be financed. So I think the reality is, it's not, you can't just flip a switch. It takes time and it takes money. And in order for everything to continue, the hydrocarbons investment will have to be, I think Dr. Anas is correct. I think it will actually probably increase.
Jared, your thoughts on that point? Jared Pearl of VTTI, more infrastructure, the better in Fujairah or other hubs?
Well, I mean, yes, indeed, because I know there's a lot of talk about the structure in the market, backwardation, contango, but really most of our assets are they're not primarily just to store oil in a fairly kind of placid way. They're part of the global supply-demand balancing mechanism. And I think that, just in the earlier part of the discussion, there was a recognition that, the large refineries that are being constructed and operating now in this region mean that some of the other locations around the world are going to be closing refineries as part of the rationalization. So you get an increased trade flow. The point I always make is actually that trade flow, if you look at the last number of years, trade flow growth globally in oil has exceeded the actual underlying demand growth because of these, changes in supply, often because of refinery movements or demand as people switch in and out of different grades for those purposes. So we absolutely, as a company, are kind of continuing to build our global footprint out in oil. In Fujairah, I think, people are probably aware, we just recently acquired a neighboring terminal. So that gives us a full kind of range of products. And I think, as Kieran mentioned, the FTL asset hosts 2 refineries that are got ambitious plans for the future. So yeah, we do see and we are participating in, building out the right infrastructure in the global hubs to follow that kind of trade flow, supply demand imbalances that we see going into the future.
And on that point, Jared, any problem getting access to capital for that activity?
No, we have a good mix of shareholders, and one of those is ADNOC. So at present, not at all. There are questions.
You aside, industry as a whole, the narrative of financing backing away from hydrocarbon infrastructure?
Well, what we've experienced is we are being questioned about our long-term plans in terms of how do we approach the energy transition as a company. And I'll probably save that because I suspect there'll be a question on that coming up. But for us, that is an important part of the forward narrative.
Okay, Tony Quinn sitting in Singapore. This obviously the sort of leader in infrastructure, you might say, but nonetheless getting away from storage of certainly crude oil and others. How do you see that opportunity, that investment in infrastructure, hydrocarbon infrastructure, where Fujairah versus Singapore or complement, or where do you see all of that at this point coming out of the the COVID pandemic and a new dawn here?
Okay, there's quite a few questions in there, Sean.
Yeah, Singapore
think
versus Fujairah and hydrocarbon storage. Singapore
what's your
doesn't want
strategy
it.
next?
We want to double down on it here.
All right. I mean, first thing is, I think between myself and Jared, we've probably got over 50% of all the storage in Fujairah between us now that he's acquired ILFS and we took GTIF. So, and we're both next door neighbors and we work very closely together. And in fact, all of your other mother companies are working with us in all our facilities as well. So there's a good relationship between us. We also have.
We don't like that. We want to hear that you guys are like, punching over the fence at each other.
No, because we just love being in Fujairah. Look how happy Captain Musa is. So now the important thing I was getting to is that we both actually have infrastructure investors in our business that actually understand what the fossil fuels business is about. And we touched on transition with the last two speakers, and I think that in a sense, transition is all about, we can make it if we actually invest in our existing business to make the money to invest in the transition. Now, what's happened, as we've seen around the world, is a lot of
You sound like Bernard Looney.
Good old Bernard.
Protecting his $10 billion profit.
Well, if you look at what's happened with, say, Shell, where Shell and BP now are not going to invest in fossil fuels, they've made this statement worldwide. Well, in fact, that's where they're making all their money. And actually, if they put that money into transition, maybe we'll get closer to whatever that final product is. Is it ammonia? Is it hydrogen? We don't know, because actually no one's really proven that yet. And the shipping industry, which is our big customer, is the demand factor in this. And we talked about LNG infrastructure. I know I'm drifting around a bit here, but we've talked about LNG. And the thing about LNG is if we use it for bunkering, those ships have to have a reason to come in to Fujairah to bunker. So we have to very carefully get that analysis right, because if we haven't got tankers that can take an LNG conversion, then that ain't going to work. So there's all those things to talk about. But as I said,
just coming back to the sort of crux of the question I did ask you, and I'll bring it back sharper. Singapore getting away from hydrocarbon storage infrastructure, and while Fujairah is embracing it, is that a narrative that's fair to assess and creates that opportunity that Anas said in the earlier statement, double down on hydrocarbons because Singapore might back away and create that opportunity?
Yeah, and I voted number 2 on that as well, as you probably guessed. But actually, taking your analogy of Singapore and Fujairah, if you look at it, they're both new hubs, relatively new hubs. Obviously, Singapore a little bit older, but there has been investment in Singapore. There's been the Pengerang Vopak investment, Jared's investment in Tanjung Bin. There's been investment, it's happening, and we have a lot of capacity here. And Fujairah has now got to the point where it's got to the maximum capacity where it can hold what's going through that facility at the moment. So in terms of infrastructure, Singapore is sort of about on a level. Fujairah, it depends on what the clients want. So, we're not going to build more tanks or more infrastructure unless our clients demand it. And I know Jared wouldn't do that either. And if we do, we'll get something to back it, and we can then go to Neil and say, can we have the money? That's the way this plays out. It's not about who's got the infrastructure and all the customers will come. It's the other way around. We have to understand the nature of the business that we're working in. And certainly, I work with ProStar Capital. We have 3 major terminals around the world and we work them all the same way. Also, like Jared, they're strategic businesses. They're not sitting there waiting for, a high-priced or low-priced oil to come in and we make a buck. Because we don't make anything. Storage companies don't make money on the strategic contango positions. That doesn't happen. So it's important to sort of understand that. And I think, in terms of the storage here in Singapore, we have a lot of storage here. And these guys are suffering at the moment because of the high price. And they're suffering of the high price because at the moment, the Chinese market has taken over all the bunkering operations in Singapore, which has impacted back to Fujairah, because you're not seeing quite so much product coming out of Fujairah now and going to Singapore. And that's because there's this low-priced Chinese product onto the market, and it's decimated quite a lot of the bunker operations locally here in Singapore. So it's a quite important factor. The other thing I'll finish off very quickly, very quickly. Infrastructure lasts 50 years, 60 years, 70 years if you look after it. It's not here for today. It's not here for next year. It was built, in the case of Singapore, 15 years ago, actually 25 years ago onwards. In the case of Fujairah, well, again, Jared was the first because Metro Refinery was the first thing there. Then Vopak opened up next door. But the majority of that storage has only been there since 2013. So it's a growing hub. So that's just giving you that analogy that it's here for a long time. It's not here just for today.
Yeah, hence the decision to pull the trigger on a multi-billion-dollar new piece of infrastructure kit. Captain Musa has that burden of responsibility with his bosses to think about. Let's get the survey result and then get Captain Musa's view on significant. Okay, yeah, that's a sort of 9-to-1 sort of answer here. I would have thought that it might not be that, but nonetheless overwhelming. Captain Musa, more is better. Obviously, you've built a lot. What's more? What's next? You've one VLCC jetty. You're going to spend a few billion on a second one. Other big pieces of infrastructure. Are you going to keep investing?
Thank you, Sean. Thank you. I think that's why I'm telling the people that you have to trust in Fujairah and work together with a port and with a partner like ADNOC and Aramco. Today, we cannot compare ourselves with Singapore, actually, because we are in the middle of the oil here. Today, the trench, the authority is saying we have more than enough the products and more to come when the refineries of ADNOC will open, will also come. So the trench is going for a crude. So that's why when we mention we are really short of the tankage of the crude, the people have to take the little bit of risk and say, and do the more study that is just there's a lot of, I mean, for example, we have a capacity of 7 cubic meter. We have only 3.5 billion of crude storage. So the trench of the government is going to the crude. That's why we build the VLCC, and the usage of the VLCC is you can say is nothing, 12 or 10%. So that's why we need the company to trust, especially the big company. Big company need to trust, because today when they open a sanction of Iran, what Anna say, who will benefit? The company, the storage companies will benefit here. Of course, the Fujairah will benefit because we are here a safer provider. But unfortunately, what will happen when Iran sanction will open? The most of the company will go for floating, and floating is very expensive. So we are telling you we are unique in this area. Let us to go. What is the cost? Compare the cost to what happened in Singapore on Fujairah and Rotterdam. You see the less cost here in Fujairah because there is no taxation. So that's why we want all the big company to trust. Today, ADNOC completely the mentality when His Excellency took over Sultan is changed, and they are going to work together. We're going to work with the company. They are already connected to all the terminal. They want to work with the company. So the ovens that they have is a crude. So what we're going to they're going to be most of the companies here. They're going to be their customer. They're going to sell to them. They're open-minded, but unfortunately, they're waiting to the last minute to expand the tankage. We are already 20% on the duties forward, and the tankage is still there waiting.
Neil, on the point of the infrastructure spend, and this is not just unique to Fujairah, but ultimately everywhere, the outlook, as Tony said, these are 50, 60-year pieces of kit. Financing seems to be only comfortable with the short cycle now increasingly. I mean, putting aside anybody will finance ADNOC, I would imagine, but ultimately, besides the sovereign risk players, the market as a whole, what is the appetite, the view of the bank and the financial sector for that cycle, that short, long cycle in terms of financing?
Well, obviously, I mean, the banks prefer the short term, and it depends where your focus is as a bank. Some have greater capacity, but generally, and particularly in this part of the world, like you said, if you're doing an ADNOC, then that's where everybody's happy. Nobody has an issue. Aramco, nobody has an issue. But if it's a smaller operator, should we say, a longer term, it's more difficult. That's why you'll normally go on a project financing, and then 3 years of operations, then you'll refinance it because it's too expensive otherwise. but then, you know, you use the project financing in order to, if you get the ECA support as well, the Export Credit Agency support as well, then that helps you to try and, you know, lower the cost over an extended period of time.
Jared, the question of the, you know, the role, or the what does the successful future hub look like? What has that changed? If you asked the question 2 years ago, pre-COVID, post-COVID, pre-COP26, post-COP26, what does the pieces of the jigsaw puzzle that need to be present? Somebody referenced LNG, bunkering. What integrated activity would need to be present to be a successful hub of the future and to get you guys to spend a few quid to put some tanks in?
Well, I think I'll begin with the word future that you mentioned.
Yes.
And
2030.
If we do look forward, there will be an increasing role of hydrogen. It's been mentioned before in this discussion. Exactly in what form, whether that is ammonia or methanol or a hydrogen carrier, but over time, around about 2030 onwards, we're all sort of understanding that that is going to be an important part of the decarbonisation globally. And actually, if you think about it, storing hydrogen, as we know, and shipping hydrogen, very expensive. So what that leads you towards is if you have the surpluses that are going to be generated from whether it's Australia or Chile or Morocco, coming into the demand centres. At the moment, I'm sitting in the Netherlands, so I'll talk a little bit about the sort of ARA hub perspective. What we're aiming at is actually an aggregation of hydrogen demands, because you don't want to move it unnecessarily. So whether that's for bunkering in the form of methanol or ammonia, and I think we're all aware that the shipping firms are starting to look in that direction and order vessels for that capability. Whether that's going to be for trucking demands, industrial demands, etc. The idea of hub actually extends not only in the oil context, but in the future context around hydrogen and hydrogen carriers. So that's, I think, an important message for everyone to soak on, is that hubs, the future, not only oil, actually hydrogen continues to give you the economics to stay with the hubs. And I think, again, on that kind of global trade flow point, I think we're all understanding that the levelized cost of production of hydrogen in the long run will be in certain locations where you've got a good combination of wind and solar, and that isn't the demand centers. So again, that imbalance between supply and demand will be quite well addressed by hubs in various regions, where the demand is then close by those receiving locations.
There'll also be, on that point, Jared, if I might, given you're sitting in Holland, of course, the ARA hub region will be under much greater transition pressure, regulatory oversight than perhaps east of Suez, certainly in certain parts. Will that also define the what a successful hub will be in the future?
Yeah, no, that makes a lot of sense. There's a lot of more activity at the moment driven by EU regulations driving the decarbonisation agenda here. But eventually, so it might be that Europe is ahead by a number of years of the developments that will need to occur elsewhere. But in the long run, we see that going, it will need to go on a global sense. But I would add that it's also accepted that the timing of all of this, you've got to be clear. We're going to be a lot of investment in time and effort and development is going into whether it's hydrogen carriers, renewable natural gas, etc. But it will take a number of years for those to reach scale. So in the meantime, we've got a number of years where oil flows are the predominant flows through the hubs. So sometimes when people hear about COP26, the interpretation they come with is that, in a few years' time, the game starts winding down in whether it's Fujairah, ARA, Singapore. And, if you do the maths and if you look at the pace of developments and what it takes to overcome some of those technological hurdles, the acceptance in the demand side of the equation, and for the levelized cost of new energies to come down to make them more competitive with the oil, then you can see then that oil flows are here to stay for quite a long time. certainly well into the next decade before you get meaningful scale impact of these other hydrogen or other technologies.
Tony, you said double down on hydrocarbons. If you do that and do not move and embrace the new fuel options as mentioned by Jared, do you risk becoming yesterday?
I think a lot of people have told me I already am, but another matter.
No, we have a resurgence. The gray hairs will be back, or the no hairs rather.
There's no hairs in my head. Sorry about that. Look, Neil's in the club. Don't worry. No,
my brother, another mother. Yeah.
So in terms of old oil, as I said, I voted on that one only because I want to see the investment in old oil to get to new oil. That's really what I was trying to say. The energy transition can only take place if we can fund it, and we've got to fund it within the business. Now, the storage terminal networks aren't going to be funding too much of it unless a customer comes along and says, I want to build a blue hydrogen plant.
Well, putting aside your own self, I mean, from the point of view of your investment, if a hub is not displaying a willingness to transition or a willingness to provide these other components that in 10, 15 years time, ships won't stop there. No, I mean, and so you won't invest.
No, that's partly right, but as Captain Musa will tell you, again, the big investment that they have made at the port in the VLCC jetty recently was done because of the ADNOC future, what was happening there. So we've got to see now. ADNOC have gone off in Ruas now, and they're planning to build the blue hydrogen plant. Well, it would be very nice if that was in Fujairah, right in the middle of the oil hub, because that would be more interesting, I think, for a lot of the players to see that come up and particularly share that around with some of the other players in the port. So these sort of projects are great. LNG could work, but as I said before, you've got to work on where you're going to put the LNG. And don't forget, LNG isn't a transition, it's a transition fuel. It goes between. It's not what you're going to end up with. And it's going to be there for another 10 years or maybe slightly more than that. Whilst, as Jared said, the economics are right between the replacement fuels that we're going to go to, the methanols, the ammonias, the hydrogens, and so on. And until they're there, until at the right cost, as I agree with Jared, we're sitting on oil. I just did a project for the largest Chinese oil company, and we were looking at a 2040 position on oil flows. That was in Asia, but it's going to be pretty much the same around the world. So we have to remind ourselves that, driving a Tesla isn't going to stop us taking oil from anywhere. It's not going to happen. It's going to happen.
But I mean,
slowly.
it's not an either or equation, right? I mean, ultimately the question is, does the infrastructure of the future of the future successful energy hub have to have all of the above? And if you don't, do you risk being not part of that successful club?
It has to investigate and evaluate all of the above, but then Neil has to put the money in, and Neil's not going to be convinced if I tell him I'm going to build a wind farm on the back of my terminal in Fujairah, because he's going to say, well, where's the return and who owns that and so on, and where's the electricity going, because we don't really need it into the UAE grid. So if you're going to produce anything with any electricity, it's not going in, it's going to go out. So LNG the same. If you convert to fuels going out, you need to find that end user. And I think the port's done a lot of work in actually trying to embrace some of these new ideas, and Captain Salam and Captain Musa are very, very prominent in that. But I think that we really need to have the push from people like ADNOC. I'd really like to see them make a move within Fujairah itself, outside of their own owned capacities that they have and their investments in the cabins, because we'd like to see that shared around. The cabin investment was an interesting one, but it actually stopped some of the potential for the future fuel business. And the future fuel oil business is going to be around for a long time in its existing form. And that's what started Fujairah off. That and the metro facility right at the beginning. So, that's what's kept us going.
Well, let's bring in Captain Musa on that point. I mean, Captain Musa, you mentioned it earlier. ADNOC, of course, that big national oil company, they've now connected to the manifold at the port. They are now part of that sort of opportunity. Where does the next step of that go now that there is a connection?
Exactly. I mean, that's why we are always putting trust on Fujairah. Today, Aramco, since 10 years ago, they've been trading, and we don't know why they've been trading. They started with one product, they are now trading with 3 products. Aramco, who is ADNOC also, since last year, they established two trading arms. One is global partner and one is ADNOC. They already started trading. That means they have a vision and a trust in Fujairah that there is something will happen and there will be a hub of Fujairah. Today, if we're looking for short vision, we'll never invest. Why are we telling you we are moving from product to crude? Because ADNOC, they're willing to listen to the customer. They're willing to sell to their customer. They're willing to sell Marban that used to be not sellable at all. Now they can blend and they can give you to blend. Covens, they are already working how to utilize the coven 20 to 30%. They're going to turn it. So the customer, they are here, they're going to benefit. When you come to the LNG, that's why the big companies, they're looking for short vision to grab that business and disappear. We at Fujairah, we're not looking completely that. When ADNOC announced that they're going to do a biggest LNG in Fujairah, they are very serious and they're doing studies because they have a huge land. Used to be with I not anymore now. It's ADNOC. So the studies on, the feed is going on. They're going to do a plan. And why they're doing the plan? The technology of the LNGs, the gas is changing in Abu Dhabi. It's not used to be usable. Now with the technology, they can use it within the country and then export it. The plant is going to be in Fujairah. That means, okay, let the people to think how we can benefit of ADNOC, how we can make a partner with that, how we can, that I'm telling you, long vision. And where is our market? Our market is the East. Our market is Africa. Is more to come. So that's where we Fujairah want to play the role. We want the company, big company, to trust and build that country. That's what we're willing to hear from them.
Let's put the last survey question actually, which is addressing this point of LNG that Captain Moussa mentions. I mean, as we talked there a little bit about what needs to be part of this successful hub of the future, does LNG have to be part of the mix? We talked about ammonia, we talked about other new fuels, hydrogen. But the growing importance of LNG in Asia's energy mix has spawned efforts to create an Asian trading hub like the US and EU for LNG. Can you be a successful global energy hub east of Suez in the year 2030 without hosting a major LNG component, storage, bunker, regas, all of these? Can you be a major energy hub east of Suez in the year 2030, which is only about 3 minutes from now, without hosting a major LNG component? Yes or no? That's the question. Inevitably, all of these things take time. Hydrogen takes time. Jared, I wanted just to, as we come to closing, and anybody who's in the room, over 65 people, whatever it was, if you want a comment or a question, just park it in the chat room. But Jared, I wanted to address this point that Captain Moussa made earlier, and also again, the future successful hub of the future being part of a substantial space that it sits in, i.e. Fujairah sits in the oil producing center of the world, or at least one of the major ones. It has its host, its purpose, its logic is obvious. China seems to be the market in which the energy hub is starting to cannibalize away from the rest of Asia, i.e. it is the consumer, but now it is the exporter. It's now moving product all across Asia and competing with all of the refineries there. My question, a place like Singapore, which doesn't have either, right? You have an energy hub, China is the customer, Fujairah sits in the Middle East with all of the producers. Does the future energy hub have to have that context, sit in that scale, rather than the idea of a Singapore, which sits essentially without that? I just wonder your thoughts on that from the point of view of success in the future and where you might invest your money.
Well, I mean, the hubs that we're referring to do, as you can imagine, have slightly different characteristics. So in, for example, ARA, one of the features of ARA is a lot of pipelines, on various products and components linking up the demand in the region, which doesn't occur necessarily in the other locations that we're always referring to. But in the case of Fujairah, as mentioned, that long-term crude productivity is going to keep on driving, as has been mentioned by Captain Musa, will keep on driving the activity there. When we talk about China, I mean, it's a very big geography. So you probably have petrochemicals starting to cluster in one region. You'll probably have crude oil starting to cluster in another. Singapore's role is a little different, and I'm sure Tony will add on this. Singapore, is looking at right the way from, kind of Indian subcontinent and all the way through to Australia and north of North Asia. So Singapore's role is really not as a sort of focused only on China. It's the whole mix of growth that we're going to see in demand of oil and gas and chemicals across those geographies. So I don't think that one needs to necessarily distract from the other. And I think in the case of marine bunkering is probably illustrating that Singapore sits very well. It's having a very good activity levels, whilst indeed some of the bunkering hubs are growing in China.
Tony, you want to pick up on that?
Well, I could just add on the LNG, that the LNG plant, of course, in Singapore is purely to power the country. So it actually is flowing back into the electrical grid. So it's not really used for bunkering. There has been a couple of small bunker operations that they've tried, but it's not really what it's for. So it's purely for power and for independence for the country. But yeah,
power is quite critical for everything, right? In terms of purpose of LNG in that regard, that it has and hence it can also be used for bunkering and so forth.
Yeah, that's right. But it's not really the LNG, and it's a very large one, has not really, SLNG has not really been used for that. It's really for electrical power. But Jared's absolutely right. I mean, the service industry from Singapore is covering a lot of areas, as you rightly say. It's going back onto the Asian, Southeast Asian, East Asian side. And of course, we've got very, very power hungry countries like the Philippines, who really don't have any refineries, only got one left now. And you've got Australia all coming out of here. And then, of course, Vietnam, growing country, and so on. And Malaysia, to a certain extent, there's a lot of toing and froing between Malaysia and Singapore. So yes, it's growing, but I think our hub is probably at the point now in Singapore where it's about right. I think we've got enough storage both on Jurong Island, both on the Johor Peninsula, on the Ruhr Islands. And so we're seeing it now where, capacities are sort of balanced in the sense that, there's a little bit of emptiness appearing. But that's probably because of what I was telling you earlier about some of the bunkering moves because of the high oil price. But that will come back. So 6 months. From
the point of view of Singapore needing to adjust its strategy going forward 10 years in order not to be consumed by China, cannibalized by China, that has a role that stands, because China is obviously, and the actors in China, getting into all of your businesses.
Yeah, well, don't forget, we've got 5 refineries, active refineries here, large ones as well, supplying the region. So there is a competition between them and the Chinese refiners, but most of the output of the products are going to other countries these days. We're not supplying products so much to China because they can do it themselves. They've got very effective refining processes now. So we're not seeing it go that way. In terms of what it needs to do, those refineries are already working, Shell, Exxon, and so on. They're all very hard working on, bringing up the hydrogen projects and the ammonia projects and looking at all those things. And, we have regular debates with them here on some of our forums. So, I think they're already on top of it. From the storage point of view, I think we're all waiting to see what we need to store. It'll take us 2 years to build a tank, but it might take 10 years to formulate the policy.
Neil, just starting to get into wrap-up comments. Obviously, as was touched on in the earlier session, COP26, 27, COP26 just happened, 27 and 28 are coming very close by and literally going to be a big factor and probably see the industry sit at the top table of the climate change challenge for the first time. I'm wondering, how do you think, or does that impact how the bank might spend money, how it might alter the strategies and policies?
Well, I mean, one of the things we've talked about LNG, and obviously it's almost like an interim, but I think Fujairah should have LNG bunkering. I think its Platts suggested that by 2030, something like 16% of LNG bunkering would be bunkering, would represent 16% of the market. So I think the sooner they get started, the better. Obviously, from a cost perspective, you don't want to build a huge regasification unit, but you can have an FSRU, the floating storage regasification unit, that could come in from abroad. But ultimately, if they can continue the relationship with Abu Dhabi has gas. Yeah, ultimately they could build a regasification unit, and then you have an opportunity to export. And then obviously the Far East has still got China that's got a huge appetite, and it's continuing to grow. Qatar signed a 10-year supply agreement for them, and at the same time, obviously with the difficulties that are going on, I still would expect Nord 2 stream, to be working at some point in time, but obviously that's going to be delayed. But then Europe is going to have greater demand as well. So I think as parts of the bow, the array of armaments to which to maintain its presence and importance, they can start doing a bit of photovoltaic, similar to what Vopak did in Rotterdam, energy on panels on the units and stuff like that. But then I think the LNG is, you can start relatively simply, relatively cheaply with an FSRU. Banks do finance them. I've previously financed them at another institution. And it's quite a cost-effective and quick fix. I mean, ultimately you get the regasification unit, you get a pipeline in, and then you can do what you want. If you can go into the grid, what they're doing in Singapore, generate electricity and then actually power Northern Emirates. I mean, you have a tremendous opportunity, but it's a question of obviously huge investment.
Yeah, it certainly looks like we're moving into a conversation about in the context of potential Fujairah. ADNOC have announced that they're looking to increase their LNG exports from 6 million tons to 12 million tons, and they're looking for a place to export from. Let's go to the survey result before Captain Musa has the last word on this session. Can you be a successful global energy hub east of Suez in the year 2030 without hosting a major LNG component? 2-to-1 answer here is no. So that's setting up Captain Musa for his last word. You better hurry up with that LNG.
Thank you very much. I think all of us will agree, and we have, today there is no competition at all with the destination that is supplying or giving a service to maritime, Singapore and Rotterdam and Fujairah. For example, we're going to remain the same number of ships that's coming in and going out of the country, the same. So that's why our bunkering quantity is about 8. The same thing happened in Rotterdam, 7.5, 8. The reason that is
7.5, 8 what? Sorry.
Million tons.
Million tons
per year. Singapore is gone because, as I say, is going to be number 1 in the bunkering, and it's the nature of different, the places different, serving so many people, places 50 to 60 they're doing per year. That's why we're telling you we are in the middle of the oil. Let us to take all the company advantage that we are in the middle of the oil. Why we are telling you? Because today the capacity of the import UAE, as you mentioned, by 2030 going to increase to 5 million. Let us to benefit of that 5 million. The same thing Saudi Arabia is thinking, what can we do outside, not only in Docom, also in Fujairah. Let the company to do and benefit of that one. While we are building an infrastructure, as you mentioned, we have 9 berths, 1 VLCC. The master plan is to 23 berths. Let us to work together. How we can benefit of this company and their expansion of the export of UAE and Saudi Arabia, and let us to work together. That's what my advice. Trust in Fujairah. We are completely different things. Because we don't want that to say, oh, Hermes is a panic. No, we're telling you, whenever a company loading or doing a business, there is a saving, a lot of money saving. For example, when Abu Dhabi announced the ICE, most of the Abu Dhabi crude or Marban, they're taken from the SPM. not because they harm us, because it's cheaper for them to take from Fujairah. So that's why my advice to all the companies, let us to benefit that we are in the middle of East, and we are a marine, we are a service provider at Fujairah. Let us to benefit, let us to work together, and all of us will benefit.
Well, let's wrap it up there. Our 90 minutes together at the 5th anniversary Fujairah London workshop comes to a close as oil prices trade at $103.78 on Brent. I would like to invite back our host, Captain Salam, just to make those closing remarks. But thank you, Tony Quinn. Thank you, Neil Robertson-Jones. Thank you, Jared Pearl. And thank you, Captain Musa, for your contribution in panel B today. I'd ask you to turn off your camera and your sound, and we'll give the floor to Captain Salam to wrap up the session. Thank you, Captain Salam.
Thank you, Sean. Just setting up the camera again. Everything went to sleep here. Well, I think, a long time we haven't met in such a forums whereby there is a knowledge exchange and, difference in opinions and things that we all benefit from. I believe throughout the years, Fujairah has managed through our, partnerships with the industry leaders and the traders that we have here in Fujairah to pull out a very successful results that not necessarily in line with the market fundamentals whereby 1 + 1 is 2. I think the future will hold pleasant results for all of us here. I am a strong believer that gas will come, and it is rather soon than later, which will bring with it a lot of other manufacturing and future fuels for Fujairah. So we will continue our growth with the support of our principals and our partners. And I would like to thank all the participants here and the attendees for our workshop. And hopefully next year we will see you live or in person in London during the IE week. And before that, hopefully we will meet in different events. So thank you very much.
Yes, indeed, we will, because we will be having the 10th anniversary Fujairah Energy Markets Forum back in Fujairah on October 4th to 6th. So mark your calendars to be in Fujairah the first week of October. And that is as guaranteed as it can be, I suppose. But nonetheless, the Energy Markets Forum will be returning to Fujairah the first week of October. We're just playing out those survey results one more time, just for people to recap the results. The LNG, you gotta have LNG. That's survey number 4. We will be capturing a lot of the commentary and knowledge exchange today in a white paper report that we will share with everybody in the coming weeks. But until then, have a great day. Let's hope for the best, that Ukraine resolves itself in as peaceful a way and as quickly as possible, and that we get to $100 oil without such turmoil. Thank you, Captain Salam, once again for hosting the 5th workshop, and best regards to everybody. All the best.